stock exchange's story now to ask how the market will be regulated. The advent of a new player has spurred the ASX into offering new platforms for anonymous trading of large institutional blocks and high-frequency trading. Huge numbers of derivatives, some of them very high risk, are now also being traded. A man who knows much about market regulation is Harvey Pitt, a former chairman of the US Securities and Exchange Commission, in Sydney as a guest of the US Studies Centre. Harvey Pitt, I gather you were on the last Qantas plane out of LA on Saturday, so we're lucky to have you. Welcome to the programme.
Well, I hope you'll feel that way after the interview, but we feel lucky to be here.
Good. Chi-X started trading today. From what you see, have we got the playing field right?
Well, I think the playing field may be right. The only problem is it may well have been delayed. I think it took a long time for them to get up to speed.
Well, this is one of the things that I think Chi-X or media has raised concerns about anyway, that it actually gave the incumbent time to set up a couple of platforms which were very much a new thing that Chi-X was bringing to the market.
Yes, and to some extent, of course, the regulators have to worry about what the impact is on investors. But there is a need for speed, and sometimes regulators can't act as quickly as one would hope.
Like it or not, I think we are now going to see a lot more high-frequency trading. What do you think of the growth of high-frequency trading?
Well, I think it's a natural evolution of technology. I think the problem is that it causes people to focus on minor trading fluctuations rather than fundamental values. And that's inconsistent with companies trying to raise capital for new ideas and new products. The problem isn't so much whether it's good or bad, but whether it can lead to serious dislocations in the market. The U.S. had that in May of 2010.
That flash crash.
Yes, the flash crash dropped 1,000 points in just a couple of seconds, and it took the regulators 5 months to explain why it happened, how it happened, and what they would do about it.
The rise of computer trading as opposed to human trading, these trades can be done 150 times faster than the blink of an eye. So if you are leveraged in a particular direction, to try and unwind yourself in that sort of situation becomes a complete nightmare.
Well, and there is also an additional problem because these computerized trading systems work off what are known as algorithms. The difficulty with those are if the algorithm sees an order, it will respond to that, but the order can be withdrawn before the trade takes place. And that was part of what the U.S. SEC was troubled about in the May flash crash.
So the U.S. have now put in what they call circuit breakers. We haven't got that here. Do you think that's something that should be coming in, given that we too will be a market of high-frequency trading?
I think that ultimately it is essential. It's unfortunate because it disrupts the natural and orderly flow of transactions, but if there are huge dislocations, the loss of public confidence and the harm to regular investors is enormous, and I think therefore circuit breakers are needed.
Do you have a view on what actually happened at UBS with that rogue trader the other day? It was largely built on synthetic ETFs.
Well, I know that the firm wants to say this was a rogue trader and it wasn't us, but the fact is you need to have the kinds of controls in place that prevent somebody from even thinking that they can get away with this. So I think the firm is going to bear responsibility for what took place as well.
Finally, more broadly, looking at Wall Street after the financial crisis of, a couple of years ago now, how much regulation has really come in and worked, and what's happening with the SEC at the moment?
Well, first let me say I don't think the financial crisis is over. I think we're still in the middle of it, and I don't think we've seen the worst of it. I am an optimist by nature, but...
So that's really bad.
Yes. But I think we have overreacted, not so much because regulation wasn't needed. It clearly was. but because we have put in, at least in the U.S., exceedingly ponderous forms of regulation that are very expensive and are not going to produce real benefits to individual investors. That is very troubling. What's happening with the SEC is there's sort of a movement afoot in the U.S. of a political nature, basically to blame the SEC for whatever it does do and whatever it doesn't do. And instead of getting constructive criticism, people are just attacking the agency.
So you're worried that this actually undermines the power of the SEC?
I believe it does, because it makes people afraid. They're afraid to act, and they're afraid not to act. And fear sort of immobilizes the agency. So I think people have to stop attacking and start becoming constructive.
Harvey Pitt, thank you very much for joining us.
Thank you.